I want to start on the sanctions regime that we're seeing today. Our top story, of course, is this move by the Kingdom of Saudi Arabia that it told us it was going to do on this program on January 15th. Now, following through with that promise, a very close U.S. ally, European ally, of course, these are two big customers of Saudi Arabia. What do you make of the politics of the timing of Saudi Arabia and the coordination with the other Gulf producers to provide more crude during this Iranian sanctions buildup?
John, I think it shows the effects of coordinated multilateral sanctions. These sanctions against Iran are based on UN Security Council resolutions that all UN member states are required to follow. We're seeing effects now inside Iran. The Iranian government just yesterday announced that it would allow dollars to be bought at market rates rather than at the fixed peg. And we're seeing effects globally, as your reporting has indicated. I think the Saudis, other Gulf Arab states who are very much affected by the security situation in Iran, are taking steps both to live up to the sanctions regime, I would say particularly financial sanctions, but also they're doing their part to keep the global economy moving forward, even at this time that the global political system puts pressure on Iran.
In fact, Mr. Ali Naimi in that interview January 15th was suggesting they'd like to keep prices close to $100 a barrel. Now, Brent is at $124, but the basket, even for OPEC crude, is around $110 a barrel. Timothy Geithner was on Capitol Hill, Bob. Let's pause you for a second and listen to his soundbite and his comments on the latest move by the Kingdom of Saudi Arabia.
And we still face a challenging and very uncertain global economic environment, with Europe still facing a long and very difficult crisis, and the risks surrounding Iran, which are adding to upward pressure on oil prices. In that context, the context of oil markets, I just want to welcome very much the statements made by the Saudi authorities over the last couple of days that they will take further action to increase the supply of oil to global markets, a very constructive signal.
In fact, in this neighborhood, Bob, you have the UAE and Kuwait who have some spare capacity. Iraq is boosting up production right now. The more cynical would suggest that the U.S., the European Union, and the Gulf oil producers have waited for their oil production to get to a certain level before they really put the screws on to Iran right here. There's a very methodical buildup to July when the sanctions kick in full throttle here from the European Union. Can I be that cynical?
Well, John, I think that the path on the sanctions effort has been clear since 2006, when the UN first started passing resolutions and we moved from unilateral U.S. sanctions to multilateral global sanctions on a coordinated basis. That effort was started in the Bush administration, continued in the Obama administration. The Saudis, other Gulf Arab states have been very much part of the process, again, because they are right in the neighborhood. They, more than anyone, do not want Iran to have a bomb that would destabilize the region. And I think that throughout, in addition to living up to their sanctions responsibilities, they've asked, what can we do to help the global economy as pressure begins to be felt in Iran, including in Iran's petroleum sector. So I think there has been coordination. Whether it's quite as tightly linked as you suggest, I'm not sure. But as Secretary Geithner said, it's very welcome news, because the two challenges to the global economy are the situation in Iran and its reverberating effects, and the continued concerns about the European sovereign debt crisis.
Well, it raises the question about whether China can continue to grow, Bob, with these high oil prices. China is the largest foreign holder of U.S. government debt, valued about $1.15 trillion at the end of 2011. The other interesting number here, Bob, we can go to the second screen by the gang here. The holdings now represent about 54% of China's foreign exchange reserves, down from 65% in 2010. So China's been trying to spread its risk a little bit, lowering its U.S. exposure. Are you confident, first and foremost, they'll continue to purchase bonds, and whether China can continue to sustain growth of at least 7%? It's gotten a lot more complicated with this handover in power in China taking place at the end of this year as well.
I think, John, that China certainly will continue to diversify its holdings, particularly in its foreign currency reserves. They will always be a big purchaser of U.S. securities, but over the past year they have begun to accumulate more euro-backed securities. I think that is a natural response for an investor looking for global diversification. On growth, I think China will grow strongly among the emerging markets and stronger than any of the industrialized countries. I think growth in the 6 to 7% range is very reasonable. But as you mentioned, they're going through a very important political transition, but they're also going through an economic transition where you're seeing more attention placed on consumer demand as well as export prowess. Over time, I think that's good for the Chinese economy, the Asian economy, and the global economy to have more balance in the Chinese economy.
And Bob, final question here. It is election year. You're sitting in Washington. There's a big difference between 2% GDP and 3% GDP. You say these are things that could either get you reelected or not. Why do you say that?
Well, at 3% GDP growth in the United States, you create net new jobs and unemployment drops. In that situation, the advantage always goes toward the incumbent, in this case, President Obama. If, on the other hand, your growth is only at 2%, you can meet your obligations, but you cannot create jobs and opportunity. And in a situation like that, the politics generally tend toward the challenger. So I think the real question in front of us now in the United States, both economically and politically, is whether we are taking part in a 3%, that is strong, sustained recovery, or a 2% recovery, which is a classic jobless recovery. Let's hope both for the United States and for the global economy that we grow strongly, that is close to our trend growth of 3 to 3.2%, that we create the kinds of good jobs that will cause unemployment to drop. If so, that certainly favors any incumbent president. If not, I think the advantage flows to the challenger.